Hi, fellas. So I wanted Eric Trelz is our guest, but I wanted him to kind of give an understanding of his background, because I think there aren't many guys with his background that have actually been in the cryptocurrency space for very long. And I wanted everyone to kind of understand where he's coming from when he talks about all these subject matters that we're going to go through for the next hour or so. So Eric's a good buddy of mine. We've known each other for a few years now, and I'm going to just leave it up to Eric to kind of explain a little bit about how he got into this world and what he's been doing.
Thanks. So Eric Trelz, I started at the SEC in 2003 in Fort Worth. And so I did examinations of broker-dealers, investment advisors, transfer agents. And so that was my background up until 2017. But in Christmas of 2016, my brother-in-law says, "Hey, what is the SEC doing with blockchain?" I have no idea what blockchain was and what it did, or even, never heard of the name. And so I started doing some digging into it, bought a book called Blockchain Revolution, and bought my first Bitcoin in March of 2017, Ether. I bought a bunch of little coins during the time, early March 2017, bought the GBTC token or stock, right? And we'll talk more about that later. But then during that time, you had the whole ICO space just blowing up. And so I just went to my boss and said, "Hey, these are securities that these people are raising hundreds of millions of dollars in a matter of minutes, and there's no regulation." So right around the second quarter of 2017, I got tasked with, who's in the space, investment advisors in the space, broker dealers in the space, who's trading it. And then, early 2018, I moved over to the Division of Exams, Office of Risk and Strategy. And from 2018 until January 2022, all I did was crypto. What is it? How does blockchain work? How does it interact with broker dealers, investment advisors in the space? And what is decentralized finance with the smart contracts? How does that all work? Custody of wallets. How do the wallets work? I worked on a 5-part training series with FINRA. We had SIPC involved. So we started all that process at the SEC. We did wallet management training with some of the folks at the SEC. And so really the last 5 years or 6 years now, it's just been crypto, blockchain, digital assets, smart contracts, and how does it all work? And so in March of 2021, around there, a buddy of mine says, "Hey, come up with an idea and we can build it." And so January of 2023 is when I left, January 2022 is when I left the SEC to start my own firm.
Well, you got plenty of experience to kind of go through this stuff. So there's a lot going on over the past couple of years with the implosion of FTX, which I think has probably been beaten pretty badly. I mean, at this point, I'm not sure if there's a ton to discuss about FTX, except what's going on in the bankruptcy and the legal procedures. But I thought I'd go to a topic that seems to be more relevant and seems to be an ongoing saga between Genesis and Gemini, and really DCG. We've been kind of digging into DCG a little bit because we have traded the GBTC ETF quite frequently. Just an FYI, we are short that name, and so I want to make sure that everybody understands kind of what this saga is all about and why it's so important that we talk about it, because DCG is a conglomerate of a number of different companies, not the least of which is Genesis, in addition to Grayscale. So, obviously everybody's heard the back and forth between Barry Silbert and the Winklevoss twins, but you have $900 million that Genesis owes Gemini. And I thought you could explain kind of how that transaction worked and where they ran into a regulatory hurdle and why the SEC is going after them.
Right. So I think we need to start further back in 2022 when Terra Luna collapsed. And so this is kind of still some collateral damage from that. And so Terra Luna collapsed, and Three Arrows Capital had money with Digital Currency Group, and that all went to zero. And so, yes.
How did that collapse?
Right. So, yes. Yeah, so Terra Luna and the Terra peg, right, which was a US dollar peg. And so what happened, I don't have all the details, but it started happening in another part of crypto where they were moving Terra Luna, the stable coin, or the Euromythic stable coin. They were trying to do something and it just got attacked, right? And so the details are fuzzy now, a year's gone by, but it started to depeg, right? And so they used the Terra Luna, which was valued at $60 billion at one time, or 40 or 60 billion. And so Do Kwon and Terra Luna was trying to keep that peg going, and it just fell down. I think it trades at 2 cents right now, and it's supposed to be pegged at $1. Well, what happened with Three Arrows Capital, they borrowed money from Voyager, they borrowed money from DCG, they borrowed money from a bunch of different platforms. And I think they had money on BlockFi, or they owed money to BlockFi. And so what happened, one of the things here is that Three Arrows Capital had like 500 million in locked Terra Luna. And so they borrowed this money, put it in a locked asset. It was locked for a number of years. And so that went to zero. And so they weren't able to pay all these creditors back. And so Three Arrows Capital failed. And it just really, the contagion just kept going. So Voyager fell, BlockFi fell. And so now Genesis, I believe, had some exposure to that. Digital Currency Group had some exposure to Three Arrows Capital. And so that just started the contagion there. Now, I don't know all the details, but what Barry did or DCG did is they loaned money to Genesis to backfill the hole that happened at Three Arrows Capital. And then the circular financing started happening. But what you're starting to see now is that Genesis is a lending platform, right, that is under SEC investigation, I believe, same with Gemini. And what is going on there is the SEC is investigating this lending platform, right? And so the earn program of both Genesis and Gemini. And so why the Winklevoss brothers are suing DCG or Genesis is they have investors' money, right, at Gemini's investors, customers, put money through the Genesis lending protocol, Earn, right? It's the Earn platform. And they would then lend it to somebody else, and they would then earn a fee, right? And so what happened is the rush or the run on the bank, if you will, and then Genesis stopped with all the withdrawals, and then Gemini in turn stopped with the withdrawals. And what we find out in the news is that Genesis owes roughly $900 million to Gemini, and those are just customer funds. And so what happens in bankruptcy, I have no idea. But that's kind of where all the trouble is. And now the SEC is investigating Genesis and Gemini because the Earn program, the staking program that they both have, the SEC believes that it's an unregistered security. And I believe they're using the Reeves case as why it's an unregistered security.
Do you think it's an unregistered security?
For sure, right? Because
I agree.
It's a pool of assets, and so
Yep.
you start doing that. Yeah.
What's amazing about this is that Barry Silbert and Genesis thought it was a good idea to take that $900 million that was loaned to them and put it into illiquid investments in the venture capital space. So these are on-demand deposits. So if Gemini's customers decide that they want to pull those assets from the Earn program, that's on demand. It's not something that's loaned to Genesis. And it's not a 5-year loan or a 10-year loan.
Right.
This guy actually took those assets, which are customer assets of Gemini's, and decided that he was going to invest those assets over and above, try to get a return over and above the amounts that they have to pay in the earn program, which blew my mind. I didn't actually realize he did all of that until very recently. But I've never seen anything like that. I would assume most companies would probably put it in liquid, some type of normal companies put it in a liquid form of investment versus illiquid. So I think the SEC is going to find
right.
that.
But if you do that, though, you don't get to pay the 6%, 7%, 8% return, right? You go back to what banks are doing, and they're giving you 2% or whatever it is on their yield. And so it was really attractive to retail investors to earn 6% on their crypto, and now they get zero back from doing all this. And so I think the SEC, should come down on these guys. These products need to be registered. I know that the SEC came down on Coinbase and said to Coinbase, you can't have this lending product. And look, it saved Coinbase and all their retail investors from this type of lock and freeze of their assets.
How does this all play into Grayscale? I know Grayscale is now going to be pulled into this, what is now about a $3.1 billion liability that Genesis is now holding. And Grayscale, which is the other part of DCG, is now getting pulled into the situation, trying to figure out what the heck, if they can stay or remain afloat, because Grayscale, for all intents and purposes, is the only part of that conglomerate that makes money off of their management fee of GBTC and ETH. So how does this all work out? Do you have an idea of how this works out between Genesis, Grayscale, and the regulatory agencies?
So I don't know. I know that Grayscale is suing the SEC because the SEC won't allow the trust, which is GBTC is a trust, to convert into a Bitcoin ETF. So there's some legal drama going on there with Grayscale and the SEC. I do know that there's been a number of firms that have pitched Grayscale to take over management of GBTC. I don't know what will come of any of that. And, Grayscale or GPT sells at a discount now and not a premium. And so, will they eventually liquidate Bitcoin to pay their investors back? I don't know. And so that's another risk that Bitcoin has, at $23,000. Does Grayscale have to liquidate their Bitcoin to reimburse investors? So that's just stuff that will play out in courts or it play out with the SEC. And I have no idea what will come of any of that.
There's a couple things that I read that was kind of seemed pretty foul. That Grayscale actually attempted to keep GBTC at a elevated price or at a premium, and that had to do with Three Arrows, where they basically lent them, or Three Arrows lent them Bitcoin. They loaned them some certain amount of money, and Three Arrows went in and bought GBTC. So it was an interesting, and that was a circular thing that happened quite frequently in order to keep GBTC up at an elevated price. Is that something is that how it worked?
So I do know at one time Three Arrows Capital was the biggest investor in GBTC. And so the SEC, you just go to the 13F filings, those institutions who have more than 5% of a particular equity, they have to file a 13F with the SEC. And so you could go back historically and see that Three Arrows Capital was one of the biggest investors in GBTC. Now, I don't know all of the details if Digital Currency Group or Grayscale was lending money to Three Arrows Capital, which I would imagine they were, and then Three Arrows Capital bought GBTC. And so it's really just, is it a fraud? I don't want to throw that word around, but did they elevate GBTC price? Maybe, because this is how the premium works, and you're in this space and you understand. So it's a Reg D offering. They hold it for 6 months, since Grayscale GBTC is a reporting company to the SEC. So the holding requirement is 6 months. They invested in AV, and the GBT stock is selling at a premium to Bitcoin. And so investors would hold it for 6 months and then sell for the premium after the 6 month holding period. That went away. And so now it's all selling at a discount. And so nobody's buying GBTC because you can buy Bitcoin for less. You just buy Bitcoin at a better price.
Mm-hmm. That makes sense. Let's chat a little bit about Binance, because Binance is kind of weaved into a number of different. To be honest with you, they're weaved into everything between Sure. FTX. I mean, they really were the impetus for the collapse of FTX through their token FTT, which they held a significant portion of, and CZ, who is the owner of Binance, decided to sell as a stake in that for, I think it ended up being about $500 million, but which caused kind of the breakdown in FTT and thus FTX. So, Binance, the more we talked about this prior to us getting on this call, but the more I read into Binance, the more nasty it gets, and the more hands they have in different areas of the crypto market. And so I guess my first question about Binance is the inner workings of Binance are pretty complex, and it's because they're not very transparent about how it all works. There were some folks that did a deep dive on Binance between, the BUSD and the BNB and the blockchain, the Binance Smart Chain, and how they believe that the Binance Smart Chain is not really a blockchain, and that the control of a lot of these assets, just like FTT was majority controlled by FTX, we have Binance now that really controls the majority, 70-80% of BNB. So my question to you to start off is, how is Binance just a larger version of, how are they not a larger version of FTX? And if that is the case, I mean, this could blow the doors off everything.
Right. And so Binance, after FTX collapsed, is the majority trader or the exchange that has the most volume in the world. And that's on the derivative space too. They're really big in the derivative space. And so Binance Smart Chain, okay, is a centralized chain controlled by CZ. They might tell you differently, but when the Binance bridge hack happened a few months ago, in which it was a $500 million exploit, CZ told all the validators to shut down. And so all the transactions on the Binance Smart Chain, or BNB, right, which is build and build chain, stopped. And so if one person can control all the validators and tell them to stop, is it really a decentralized exchange or a decentralized platform? It's not. And so, and so it's just a centralized chain controlled by CZ and maybe a few other people, but mainly CZ. And so you have tokens that trade on Binance Smart Chain that are just scam. They're just there to scam people, and they do it all the time. There's no regulation on that exchange. You as a U.S. investor, you can't log in and go to Binance.com or whatever the address is and trade on their platform. You have to do it via VPN. So they're geo-fenced U.S. investors a long time ago. And so, but nothing good is on the Binance Smart Chain. It's just, I think a lot of the tokens there are worthless and really there to take advantage of people.
So how could regulators not come in and shut it down? It's worthless tokens. I mean, it's fraud.
Right. So,
shut down?
well, it can, but Binance operates in multiple jurisdictions, right? And so he's not in the United States. So Binance is not in the United States. They have an affiliate, Binance.us, right? And they are regulated I think, by the New York Department of Financial Services. But they're not the exchange is not registered with the United States, right? So it's not registered with the SEC. It's not registered with FINRA. I would imagine, since FTT or FTX collapsed, there's going to be a greater scrutiny on these regulated or these exchanges that are registered with the SEC or FINRA. So why hasn't it been shut down? I can't answer that, right? He makes a lot of money. There's a lot of money in Binance.
Well, I mean, it's also interesting that they work with a number of different banks that are now being pinned for a number of different reasons. But you have Silvergate Bank, which they have been really kicked off of not too long ago, but they don't do any banking with Silvergate. But the one bank that does do business with them is Signature Bank, and they do it through their Signet blockchain, their independent Signet blockchain. And so what I find interesting is they're able to still, or they're not able, but they're still doing business with Binance, which is a very, very slippery slope for Signet or for Signature Bank through their Signet network, because that Signet network is private. You never know. I mean, once you're in there, you're in. It's like going to a speakeasy, and nobody knows what goes on in the speakeasy, but everything's free and you can do whatever you want, right? So I think that, and then there's another number of other banks throughout the world that they're doing business with, but slowly they're getting shut down by these banks. Do you think Signet is eventually going to kick them off, and how's that going to affect them going forward in the U.S.?
Yeah, I don't know much about what they're doing with Signet.
Signet's the Signature Bank's blockchain, so that's how they do business within Signature Bank. Sorry.
By the way, that stock is down $6 after hours, or $7.50, 6%. If I got a good quote.
Yeah.
Yeah, I don't know what they're doing with that, but as an off ramp with their stablecoin, right, or any off ramp into fiat currency will be scrutinized, right? And so you have, so CZ has historically been anti money laundering or anti money laundering. There's videos out there on YouTube him talking about KYC. Right, this is things I saw back in 2018, and so there's some illegal activities probably going on in Binance that should be shut down. But once you go from the crypto space, the centralized Binance space, into a fiat regulated space, those individuals will have to be KYC'd. So I'm not sure how individuals are getting on an off ramp into the fiat world. That obviously then regulators will look into that. I have no idea, really.
And they cut off a portion of it this past week by saying that nobody under 100,000, no transactions over under 100 grand is going to go through Signet anymore. So they're getting rid of the retail,
right, I see that, yeah.
Trying to get rid of the retail from doing business with Binance and pulling their assets out of there.
Well, let's talk about the. Oh, go ahead, Jason.
No, go ahead.
Well, I was just going to talk about the Binance US dollar, right? And so that is, I forget how big that one is right now. But let's talk about their stable coin. Okay. And so the Binance US dollar is like $15.6 billion. Okay. Now the Binance stablecoin is an ERC20 token. Okay. And it's issued by Paxos, and it's regulated by the New York Department of Financial Services. But what is not regulated is the BSUD peg that trades on Binance Smart Chain, or the BNB chain. Now, there are reports out there, I think came out end of last year or first part of this year, that the peg is not really a peg. So who's controlling the wallet in which the Binance peg is who's controlling that wallet, right? So there's no transparency into that. And so Binance came out and said that there was $1 billion shortfall in that wallet. And so where's the trust in that? And so you have $1 billion that you manufactured to trade on your chain, because ERC20s or tokens minted on Ethereum don't trade on another blockchain unless there's a bridge or a peg, a wallet in which it pegs to the other chain, the asset on the other chain. And so who's monitoring that? And now the pegged the BSUD peg is now on Avalanche and some other chain. I think Polygon, don't quote me on that one, but who's monitoring that on those chains, right? And so I think, there's some fishy stuff going on with that peg on the Binance Smart Chain, in which it should be dollar to dollar, right? And so who's issuing more of these pegged BSUD when it's not backed by anything? And so now you could have a run on BSUD on the Binance Smart Chain, and he can't pay all of that back, right? And so, there's some stuff going on with that.
Well, I think
so
a portion
if that collapses, that's $15 billion.
And they're creating these token pegs, this peg BUS dollar out of thin air. If they need money,
yes,
they print them with. I mean, there's that just shows you there's no value in that peg BUS dollar, and so
right, and it's because there's no transparency into who's controlling the wallet, the administrative keys to that wallet, and how are more pegged BSUD being minted than are in the wallet, the BSUD wallet on Ethereum, right? And so there needs to be some clarity on all that, because now you could have a run on the Binance Smart Chain or the BNB chain on this pegged BSUD. Now, on the Ethereum chain, right, because the BSUD is monitored by Paxos, and Paxos is a reputable company here in the United States. And so when dollars come in, Paxos mints a Binance US dollar coin, stable coin. And so there are, Paxos is a reputable company. So when those 15.65 billion tokens are issued, stable coins, there are reserves in which they have been audited. I've never seen any of the audits, but I would trust that Paxos is not allowing fictitious BSUD to be minted here in the United States. So it's happening on the Binance chain and out of their control on the Binance Peg coin.
So it could technically be the peg BUSD could technically be the equivalent of FTT if there was a run on that peg BUSD. Correct?
So right, so people will just cash in, right? And so they'll just move. And so you can't use US dollar coin on Binance anymore, right? So they got rid of that. So you'd have to find another token in which you can take your pegged pegged BUSD and convert that to another asset. And so what you'll have is you'll have a run on the pegged BUSD, and Binance won't have enough assets to fill those orders, if you will. Mm-hmm. And so, they'll have to get that $1 billion from somewhere else.
So I heard that through Silvergate Bank, they went ahead and got some money from the Federal Home Loan Bank or something to bail out some of the depositors. Is that real?
So I saw that headline, but I don't know the details what Silvergate was doing with getting a loan. It's basically being bailed out by U.S. by somebody in the United States, right?
Yeah, by taxpayers.
By taxpayers.
I mean, why has Silvergate not been approached by the FDIC and just shut down? I mean, what's taking so long for these guys?
Right. And so what I know at my time at the SEC is investigations take time, right?
Okay.
And so nothing happens overnight with investigations. And so who knows if FDIC or the Federal Reserve is in there doing some examinations. First, examiners go in and then enforcement goes in afterwards. And so it takes time. So maybe it's being done behind the scenes, and obviously all enforcement actions are non-public. So my guess is that they're in there and doing some exams and really some testimony on the executives at Silvergate.
John, I'll
do that before they pushed out billions to them.
Right.
They that is true, John. I actually read I read a number of articles and things from the Federal Housing Authority. I forget what the acronym is for it, but they lent Signature $15 billion, and then they lent Silvergate $3 billion. So, I mean, at a very low interest rate. At a very low interest rate. So even with that 700, I think.
Go ahead.
Now, even with that $780 million loss that they had to take from deposits being removed from their send network, it's still, they got a nice chunk of change to deal and plug the hole. So I don't think this is going anywhere for a long time. They have plenty of money at this point, so they're probably going to fight whatever comes to them from the regulators. It'll be interesting.
Yeah, a lot of this will play out over the next year or two.
So what do you think, looking out into the future, Eric, I see three things that could really break this market. And I've said this on another podcast. It's the three-legged stool of DCG, Binance, or Tether. And so out of curiosity, what do you see really creating a really big long winter in this crypto universe? What's the first leg to fall, or is there another one that you think is going to create this catastrophic event for the crypto space?
So DCG will be the first to go, right? And so, I know that they're trying to get $1 billion raise, and nobody's wanting to give them $1 billion. And so the first part of that, Genesis Trading filed for bankruptcy. I don't know how that impacts Gemini, but Gemini laid off staff. You have Nifty Gateway, being lost on the name here, but Nifty is an NFT platform. Those co-founders left Gemini. You have Luna, which is an exchange. The founders left that, and that's part of the DCG portfolio. So I think DCG goes first. I'm not sure the details on how they go, but they will file for bankruptcy. And then Binance is just under a lot of pressure with the reserves that were just fake reserves. And the auditor who did the audit, if you will, of the reserves of Binance stopped doing all crypto reserves because I think the risk is just too much for that auditing firm. And so you have a lot of there's a trust issue going on with Binance, and so you have the pegged BUSD issue going on there. You have a lot of compliance issues with AML issues. The United States, I may have read an article that talked about North Koreans using Binance using them as hacks or as a way to take illicit funds from hacks and trade them through Binance. And so because they don't KYC anybody, and so now you have a lot of OFAC issues in the United States. In most Western countries, have a KYC component when dealing with financial institutions. Binance is trying to get there, right? And so they're doing a lot of hiring of compliance individuals throughout the world. And so they're really trying to backfill the compliance part of all this. I don't know if it's too late for them to do that, but that's what they're trying to do. You can see a lot of hires by Binance in the compliance space. As it comes to Tether is not backed dollar to dollar, but nobody in the crypto space wants Tether to collapse because it is the fuel that is connected to everything: derivatives, staking, trading, everything that you see in crypto, Tether is tied to. And so there's really no true accounting audit of Tether reserves. By the way, if Tether has a pool of assets in which it's pegged to a dollar. That is a security here in the United States. So I don't know why it's allowed to trade here in the United States, but it is. And so you could talk to the SEC about that. The pool of assets maintain a valuation, which reminds me of Alan Stanford and his CD scam, right? The Ponzi scheme that Alan Stanford did down in Texas, where he had, we all understand that a pool of assets, the valuation changes over time, and to have those assets maintain the same value, but without any major deviation, is pretty difficult. And so Alan Stanford had 2 years in a row in which his CD had the exact same return, which is not impossible. It's just improbable. And so now you have Tether and their pool of assets that just doesn't make any sense, how they manage that, the flows of the money in there. And it's not backed dollar to dollar. Everybody knows it, but nobody cares, because if Tether goes away, so does a lot of the crypto that we trade today.
Can I ask you a basic question there, Eric?
Sure.
Why the hell does all this crap exist anyway? It just looks like to me it was a Ponzi scheme from the beginning, and it was designed that way to take advantage of people, and they're trying to mimic a fiat system that we already have. I mean, I don't get it.
Right. So criminals are going to be criminals, right? And so they will find a new wrapper to steal from people. But Bitcoin founded in 2009, right, by the white paper Satoshi Nakamoto, right? And so that really revolutionized payment system, right? And so all on blockchain, in which you don't need an intermediary. So I believe Bitcoin will not be done away. It won't go away, right? I don't care if Binance fails. I don't care if Tether fails. I don't care if DCG fails. Bitcoin is not going anywhere. Bitcoin allows for the free movement of value, okay? Now, you might not agree that Bitcoin has any value, and there are a lot of people that don't agree with it. But what it allows to happen is anybody who has an internet connection or a cell phone connection can trade Bitcoin or trade value. And so really what it's done is it's changed the way people can trade value or exchange value. Now, you can argue that Bitcoin network will never scale to where you can buy a cup of coffee. Well, that is true, right? So you have 3 transactions per second, and it's just never going to be used for micropayments. But then here comes the Lightning Network, in which is centralized, right? So these are all transactions that are done off the chain, and they're settled on chain when you want to get off the Lightning Network. And you could do, 40,000 transactions per second on the Lightning Network. And so Bitcoin's not going anywhere, okay? But what happened is, in 2015, Ethereum comes along, right? Vitalik Buterin, and he created an internet or a platform in which you can build value on top of it. And there's companies that build value on top of Ethereum, right? ERC20 tokens, 721s, 1155s, the security token market, right? So the STO, and we'll talk about that here in a little bit, but ICO market came off of in 2017, the birth of digital asset securities, right? And so just because we have a new technology, right, blockchain, you are going to find people who are scamming people. It doesn't matter what it is. And so scammers are going to scam, criminals are going to be criminals. And so this space needs to be regulated, obviously, and it's coming after the FTX collapse. It will come if Binance collapse overseas. It will come if Tether collapses. And so I think Gary Gensler has an opportunity to really just get out in front of all this and tell these crypto exchanges or marketplaces to register here in the United States. And I think he needs to force the registration or force them to move overseas like Poloniex did in 2018, maybe. I forget when they moved overseas or offshore, right? Poloniex was an exchange that was bought by Circle. They traded unregistered securities. They geofenced U.S. investors. They moved. I don't know where they moved, but now nobody can get onto Poloniex, and so they paid their pittance to the SEC. A year or two ago, they paid their fine, but still, I think blockchain is going to change everything, right? NFTs. We can talk about NFTs, and really the NFTs allow for blockchain to be what it was always meant to be. You can store records on blockchain. Before NFTs really took off, you couldn't put a PDF on any blockchain because the file was just too big. But now NFTs they'll change the world. Anyhow, so scammers are going to scam regardless of the technology. We just need to be, I think regulators need to be smart about how to regulate the space and really come in with a hammer and penalize these scammers.
So this is a good segue because it falls into what we do, and we understand in intricate detail how markets work. And what I found extremely interesting about what you're trying to do is that there isn't anybody that's figured out the main component of how to implement a newer version, more efficient version, and a newer way for markets to operate, a more efficient way for markets to operate. And the big thing when you tokenize, let's say you tokenize a stock, is that you can't transfer. What's the word I'm thinking of? You can't transfer over the token's private key. And so you have a middleman that holds that private key until you sell to another individual that purchases it. And nobody's able to come up with this way of making sure that if I'm trading a stock and I trade it to you, how to move that private key from one individual to another. And so what I want to go through is kind of what you're up to and how, the things that you're trying to build at this point. So I think it's awesome.
And so what you're trying to talk about, so when you move a token from a wallet to wallet, so private key, so a blockchain wallet has two parts to it. Really, it's really just a key generation or a key wallet, if you will. So a blockchain wallet typically just has two parts to it. It has a private key, which is your email password, and your public key, which is, your email address. And so those two things are part of a wallet, a blockchain wallet, a digital wallet, if you will. And to transfer value from those wallets, you just do it usually via on-chain or through a centralized exchange. And then you just tell your wallet to send it to here, right? And it's all done through interfaces. So it's really simple. You just say, hey, I got ETH and I want to sell it. And somebody just gives you dollars. Usually that's how it works on a centralized exchange. But so what did I do? And so I spent, like I said, 18 years at the SEC doing examinations of broker-dealers, right? Investment advisors, transfer agents. And so really, I have an understanding of how custody works under 15C3-3, which is a customer protection rule. And the SEC says that you have to have a good control location or possession or control of a fully paid for and an excess margin security. And so I understand that. And so for 5 years, at 2017 to 2022, all I did is understand how crypto works. How do smart contracts work? How does wallet work? How does staking work? How does gaming reward tokens work? And so really, and automated market makers, which is really here. You can hear my dogs in the background. And so I married them together, right? So I married blockchain together with decentralized finance and custody. So what I now have is the ability to meet SEC's custody requirement, which no one has yet to do, because the SEC requires ATSs who trade in this space to custody at a custodian, right? And so
explain what an ATS is, because I don't think anybody understands what an ATS is.
Right. And so an ATS you have to be a broker-dealer to be an ATS. An ATS is an alternative trading system, which is an exemption from registration as a national exchange, like a New York Stock Exchange or NASDAQ. And so it allows for trading, individuals to trade, illiquid securities, right? And so things that aren't traded on NASDAQ or OTC or Pink Sheet typically trade through an ATS. And so the SEC allows for broker-dealers to be digital asset ATSs, and they trade, tokenized securities. Okay, so the problem I solved is because I married automated market makers to my custody solution to a blockchain. So now, well, let me just say why centralized market makers. Let's talk about centralized market makers for a second. And so the entire stock market moves or trades with centralized market makers. Buyers, they make their bids over here, they make their ask over here, and stock is traded between the two, right? And so if you don't have a market maker, you don't have a market for the stock, right? So it's very illiquid, even if you talk about pink sheets, OTC, or NASDAQ, or New York Stock Exchange. And so ATSs operate the same, but they're more illiquid than the national exchange. And let me explain how the ATS works. And so an ATS, you have an offering on there, okay? And so an investor wants to sell their token. Well, they have to find a buyer for their token. No different than how New York Stock Exchange, NASDAQ works. So you need a buyer for a seller and a seller for a buyer. And so that causes illiquidity, right? There's still it's not a very liquid market, even on the digital asset ATS when tokenized stock, okay? And so what did I do, right? And so you talk about automated market makers. And so what they are is it's just a smart contract that's on blockchain, okay? Nothing fancy about it, but it allows for trading through this thing called a liquidity pool, okay? You have a stablecoin dollar, US dollar coin, for example, in your token, okay? And it sits in a liquidity pool in which then that is the counterparty, okay? And so if you have an investor who wants to sell their token, they trade it through the liquidity pool, and there is no counterparty to that. So they trade through the pool automatically rebalances if it's a buy or sell. And that's the beauty of automated market makers. So what did I do? So I've removed the need for a centralized market maker, okay? And so my custody solution allows for a special purpose broker-dealer, which I'll be, to custody the structure, okay? It then allows, once you get SEC approval, which will be a year or so, then it allows for a national exchange to be built, a very first national securities token exchange, okay? Built on blockchain, which Hyperledger Fabric is right now the chain of choice. And it allows you to build this automated market maker, all on blockchain. And so now you can list Reg D tokens, CF tokens, Reg A, Reg S, S1s, right? On the exchange, custodied at the broker-dealer, right? And it meets all the requirements of custody. And now you could trade with instant liquidity because you're trading from a liquidity pool and not a counterparty. And so DeFi will change the way capital markets trade, okay? And I figured out how to do it compliant-wise with the SEC. And so what I'm trying to build first is a broker-dealer, a special purpose broker-dealer that is specifically and only for digital asset securities. So I can't trade stocks, bonds, mutual funds, ETFs, or any other asset unless they've been tokenized, okay? And so that's what a special purpose broker-dealer is. They custody smart contract securities on chain, okay? The second part is a clearing agency. Now, not the typical clearing agency you hear today at a national clearing corp or anything. Really, it is a honeypot of public wallet addresses, okay? So, and then the national exchange on top of that, all built with the custody token I have, the structure, all built on blockchain. So T+4 means token plus 4. And so that's the journey I'm on, right? And so what I'm trying to build is a new capital markets rail system, all on blockchain, okay? Now, what I get a lot of feedback from, I don't get a lot of hate, but I'm just going to tell you, you can't build a new capital market structure on a public blockchain. It's just not going to happen. The SEC is not going to say, okay, Ethereum is the chain you can trade trillions of dollars on, right? It's not going to happen. Solana is not going to happen. It's not going to happen on a Cardano or any other public blockchain, okay? It's just not going to happen. And so I chose at the moment Hyperledger Fabric, and they are a hybrid permission blockchain that allows it's modular, so you can build it in stages as you need as you grow. It can scale with the number of transactions, and you can have node operators, right? They're called orderers, dispersed, and so anybody who wants to be part of the network has to be a government regulated entity, and they could be anywhere in the world. And so I might not be decentralized, but I am significantly dispersed, in which all transactions happen, not in a central entity controlled by TP4, but the transactions happen in the dispersed network of node operators. Now that's a lot going on.
Yeah. How's that different from what Overstock's doing with T0?
Right. So T0 is an ATS. It's a BD ATS. And they're required, as per the SEC no action letter that was given to FINRA, is a three-step process. You have a buyer, a seller. They then communicate to the custodian. They settle off the broker-dealer. So the broker-dealer is not allowed to custody any digital asset security, right? So that's T0. That's all the other broker-dealer ATSs, okay? So what's different? I am a special purpose broker-dealer for the custody of digital asset securities. And so I am a complement for what T0 is doing, right? So T0 can't custody digital assets, but I can. And so what's great about how I structure the token is that the token can be taken off of the TP4 exchange, the national exchange, and traded on T0 and every other digital asset exchange out there, or ATS. And so that it allows for arbitrage for the first time ever. A security can be arbitrage. And so you can trade it on T0, you can trade it on 4 different ATSs, and you can trade it on the TP4 national exchange. And this all has to happen with agreements in place, because you have to have real-time trade reporting to FINRA. And so once these agreements in place, you can trade any asset on any exchange with my custody solution.
So T0 doesn't have a custody solution?
Right. So T0 can't custody any assets per the no action letter at the SEC gave. And that goes for every digital asset ATS. They don't custody anything. They use a third-party custodian.
If you figure this out, man, you got to make sure you become one of our clients.
Right. And so really it becomes so my solution is not to compete with these ATSs. It's really a complement. It allows for the ATS to trade multiple digital assets at the same time. And so how you see ATSs work today, they're all siloed, right? So you have a digital asset ATS over here that has these digital asset tokens, or these STOs, right? Security token offerings. And so you have this ATS over here that trades these. You have this ATS over here that trades these, and these ATS, this ATS over here. And so as a broker-dealer, say a Charles Schwab or any other mom and pop broker-dealer, they now have to be a member of each of these broker-dealers in their ATS, okay? So if I have a token I want to buy as a customer, well, then I have to be a customer of this broker-dealer, this broker-dealer, this broker-dealer, this broker-dealer. And it just doesn't make any sense. And so ATSs by nature are fragmented, right? They're siloed companies and they all work independently. Now I know that there's some APIs that are trying to be developed that will help tokens trade across multiple platforms, but it's not here yet. And so you have all these ATSs that are trying to be the end-to-end platform. Well, I'm not in the business of raising capital for you. It's not what, I'm about ready to file my broker-dealer paperwork, the special purpose broker-dealer paperwork. And in there, I just say, I'm not in the business of raising capital. So if you're an issuer, you go to a crowdfunding platform, we'll partner with the crowdfunding platform, we'll partner with all these other ATSs, or anybody who wants to raise capital for issuers. Then you can tokenize that with our structure. You can be custodied on TP4, and you can trade on these ATSs, and eventually you'll be able to trade on the TP4 national exchange. But we have a huge headwind, right? And so as of today, right? So January, no special purpose broker-dealer has been approved. And so, FINRA did a podcast, or membership application group did a podcast at the end of December, and they stated as much, that no special purpose broker-dealer has been approved. And it is my belief is because each of these special purpose broker-dealers or these broker-dealers are trying to build on a public blockchain or a chain that's been built by a Chinese firm, right? And so it's really difficult for Congress or the SEC to allow for potentially a multi-trillion-dollar market to trade on a public blockchain or a chain that's built by the Chinese. And so I'm using a hybrid enterprise blockchain. And people don't like it, but I tell you what, if you're an issuer raising money, you want to tokenize your issuance, okay, with my structure, and you could trade it once. Obviously, we're years down the road for having a product that you can use because we're in a highly regulated market with SEC and FINRA. But does the issuer care that I'm on an enterprise blockchain? Probably not, right? Does an investor who has access to liquidity care if I'm a public blockchain or a private blockchain? No. You build stuff. This is Anthony Pompliano's quote. You just build shit people want to use. And so if you build stuff that people want to use and can use it very easily, they don't care what operating system's behind you, if it's Ethereum or Solana or Hyperledger Fabric or R3 Corda. It doesn't matter. People want to be able to use and trade their assets, their security tokens, digital asset securities, in a way in which there's no hindrance to it. And so if you build stuff people want to use, people will use it. And so that's what I'm trying to do.
So it sounds like you have no competition.
Right. There are some who are trying to do it, but again, they're trying to do it on a public blockchain, and they haven't figured out custody that I'm aware of.
So when you have, say you're set up and you have this exchange, how does it work with public companies? Let's take Google, Microsoft, and Apple. Do they tokenize the security in some way, shape, or form? Does it work the same way as the stock exchange, New York Stock Exchange or NASDAQ these days?
Right. And so we will never tokenize an existing equity that trades on another exchange or over the counter. We will never tokenize IBM. We will never tokenize Google or any other asset that trades on another exchange or somewhere else. Okay. The SEC said no to Boston Security Token Exchange. It says they wanted to take an asset, tokenize it, and trade it on their exchange. The SEC said no. There's a number of reasons why they said no, but one of the takeaways I took is that an investor won't know the true trading volume of IBM, for example, if it trades on the New York Stock Exchange and your exchange. And so we will never tokenize an asset that already trades on another exchange. We just won't do it. So if one of these other listed companies want to issue new shares, call them Reg D shares, or D-class shares for digital, we could do that because that doesn't trade. We won't trade the A shares, the B shares, or we would trade just D shares. Okay. And we could do something like that, but we will never tokenize equity that exists or bonds that exist or anything. It'll be all new. So if somebody that's listed on New York Stock Exchange or NASDAQ or OTC, what they could do through the transfer agent is get the list of shareholders, right? And they can then convert their equity into a digital asset security and then do away with all the equity trading, and they can just trade in the DeFi space or what I'm building, TP4.
Is it possible to use this and get rid of title companies and just trade real estate? I'm selling my house to Jason. We do it through your platform. We agree on a price, and the ownership transfers because you're the custodian of that asset. Transfers from me to Jason.
Right. So you could do something like that, but I'm only dealing with equity, right? SEC registered companies, SEC exempt companies offerings. And so you could do stuff like that on another blockchain, but that's not what I'm trying to build. Yeah. But real estate will change on blockchain, right? Titles, deeds, right? All this is coming. You have a lot of companies that are tokenizing real estate, right? And so there's a solution for all that. And so you tokenize the asset, and then you can trade it on what I'm trying to build, or you can trade it on an ATS. But again, you have still, just because you tokenize an asset doesn't mean you have liquidity. You still have no liquidity.
So you really are a competitor of the net. You're going to be a competitor of the NASDAQ and New York Stock Exchange. So if a company comes out and they want to go public, they're going to end up either choosing you, the NASDAQ, or the New York Stock Exchange to list their securities. Is that what I'm hearing, kind of?
Yeah. So that's one of the things that, will New York Stock Exchange or NASDAQ be the future Blockbuster or Radio Shack? Right? They have to adopt blockchain. They have to adopt a way in which they can custody assets, right? And they have to, as soon as I file and become registered with the SEC and FINRA, and the exchange becomes registered with the SEC, then the secret's out how I custody and how I structure a token, right? So my structure works on any blockchain that exists today. I just choose to use Hyperledger Fabric versus any other blockchain. But will I be competing against NASDAQ and New York Stock Exchange? They're really expensive to be listed and trade on New York Stock Exchange. It's like $200,000 to be listed on the New York Stock Exchange, and it's $200,000 a year in maintenance fees, if you will, to be listed on New York Stock Exchange. But these guys are billion-dollar firms. What's $200,000 to them, right? And so there will always and forever be a New York Stock Exchange. There will always and forever be a NASDAQ. I'm just an alternative to listing. And my alternative eventually will be with instant liquidity, no counterparty risk. There is no daily deposit fund that you need to have as a broker-dealer on the platform. We'll have APIs that will work with any broker-dealer who wants to allow their customers to trade. The wallet solution is pretty simple. Nothing is complicated. Nothing is complicated, right? Now, if you're dealing with Bitcoin, you should have a multi-sig wallet. You should have a hardware wallet. You should have an MPC, which is a multi-party computation wallet. You should have all those. But for digital asset securities traded the way I structure them, you just need a regular blockchain wallet, nothing fancy. Custody that I do doesn't require multi-sig wallet, doesn't require this MPC or any other type of wallet, okay? It doesn't even require cold storage, because the way I structure it, based on decentralized finance principles with blockchain and the SEC requirement of custody, nothing is difficult. It's super easy. And so I follow the KIS, whatever it's called, to keep it simple, keep it super simple. And that's what I do. And so if your wallet gets hacked, it doesn't matter. If the exchange gets hacked, it doesn't matter, right? So I solved the SEC's complaint or concern about internal hacking or internal theft or external hacking and theft, because how I structure the token, there's no risk of theft. There's no risk of somebody taking an asset off the exchange and trading it somewhere else. And so we really just simplified everything, right? And makes it super easy to use. Nothing is complicated. So any broker dealer can come on board. Their investors can trade. Their customers can trade directly to the exchange, and we just custody everything. Everything is super easy, guys. There's nothing complicated with what I'm trying to do. Oh, you're muted, bud.
You're muted, John.
Sorry about that. So I'm a simple guy, right? So the reason, so let me understand this. Jason and I have a growing company, it's doing well, yada, yada, yada. And we have some folks that say, hey, we'd like to participate in the future of your company. Can you sell us some shares? It sounds like to me that what you're creating would be allow us to say, okay, we're going to create liquidity and we're going to put it out there for whatever valuation we figure out, and people can buy into our firm in a pretty simple manner without going public, without having all the costs associated with it, and so on.
Right. And so I don't change anything, right? A Reg D is going to be a Reg D. A Reg S is going to be a Reg S. Reg A is the same. All the same. I don't change anything, right? So the capital raise that anybody's trying to do is the traditional capital raise. The only thing I change in what everybody's trying to do in the digital asset market, digital asset securities market, is tokenize that equity, right? And I do it in such a way that meets SEC custody standards and allows you to trade like you do in decentralized finance because of how I structure the token. Okay. But yeah, so if you want to do a Reg D offering, right? And so you would then come to TP4 or any other tokenized service provider that is partnered with TP4 that will tokenize your equity in our structure, the way we structure the token. Then you can then tell you have your holding requirement, right? It's everything. Everybody has holding requirements except for Reg A, right? Or S1s. And so once you meet your holding requirement, you can trade via, accreditation status and via, trading restrictions. You have volume restrictions on Reg D. And so we meet all the trading restrictions, right? We meet because it's all processed, right? Through this thing called a clearing agency, which is probably, you have to paper a lot of this stuff because the SEC still requires you to have a transfer agent. And so we'll have a transfer agent that does this, or we'll partner with a transfer agent that will do it for us, right? And so nothing's complicated though, John. Nothing's complicated.
Now with settlement, is this going to be instant settlement? Whereas now, it's trade day plus 2 days. Is this going to be something that, that aspect of it is probably wonderful for most. So what does that look like?
So settlement happens. So traditional market, right? So you trade IBM. You get on your Charles Schwab account and you want to sell IBM. Okay. Well, IBM goes into this centralized electronic database, right, with your counterparty, and it takes 2 days to settle that through DTC or through National Clearing Corp. So it takes typically 2 days to settle, and then you have all these fails and things you have to deal with. But what I've done, right, is implement the automated market maker from decentralized finance, and on blockchain, right, it settles instantaneous within seconds, and it's finality on chain, right? So it's recorded on the ledger, right, the blockchain ledger, and it's immutable, right? So it can't change. And so what we changed is the T+2 that you have today to T now settlement finality. And that will revolutionize everything. So now if you were to so the whole GameStop thing that happened a year or so ago, where Robinhood was required to drop $3 billion at the National Clearing Corp as a deposit because you have counterparty risk. We do away with all that. There is no counterparty risk when trading at TP4 because everything's settled instantaneous or T-now settlement. And you don't need to have that daily deposit reserve that is required for broker dealers to transact through DTC today, right? We do away with all that.
It's a big deal.
So as a trader, right? So as a trader, right? As a day trader today, you need $25,000 in your account to be a day trader. At TP4, right, through your broker dealer or whatever, you don't need any of that. You can just trade because it's instantaneous settlement, right? And so you don't have to wait 2 days to sell a stock you bought, 2 hours ago.
It's gonna make it a lot easier for people to transact, less fraud and less of a pain in the butt. But with that being said,
it's all transparent. Everything's viewable, right, through a blockchain explorer. So you can see all the trades that are happening in real time. And so there's no longer this secret, right, payment for order flow where somebody gets to see nanoseconds faster than anybody else. It's all done. And because our validator nodes, I know we're running long here, but because our nodes are all regulated by government entities, if they front run MEV, right, miner extraction value in DeFi, they get shut down and their transactions get reported to the regulator. And so they won't be allowed onto the platform for a while. And so, we're just building trust that doesn't exist in the capital markets today.
It would be really nice, John, if we could get the zero data till expiration options the fuck out of here so we don't have to deal with it anymore.
Right.
I just unmuted to say the exact same thing. It's like, there goes the zero DTEs. Thank God.
Yeah.
But it's going to take a couple years to do it because, it's a heavily regulated space and it's never been done before. So TP4 will be the first.
The manipulation and the fraud by some of these big players is literally in your face.
Yeah, they probably won't use TP4. They probably won't use TP4. but I'm okay with that, right?
I mean, I would love to get some of these games out of here. I mean, you've seen it. The notional value of some of these SPY option contracts are insane. I mean, you've seen it happen over and over again over the past 3 days. John and I watch it each and every day. The amount of call contracts that were purchased on the 400 level today. I mean, shit, it happened yesterday too, but it's astronomical. It's insane. The notional value is in the billions on one line of option contracts. So, just getting rid of some of these games that were played.
They mature within hours. I mean, nobody would ever do that unless they're trying to manipulate markets, right?
Yeah, it's done every day, right? And so, yeah, I think, decentralized finance is really going to change the game, right? And I figured out how to custody it via decentralized finance. I build it on a blockchain, and I meet all SEC requirements of custody. And so I'm playing the regulatory game of being approved. And so we're just the race to be first approved. And so I have the experience, to build this, and I'm not a coder, right? And so, I'll have to, partner with somebody who can do all that, but I know how it all works. I know it works. If it works in decentralized finance, it'll work in capital markets. And so, it's going to change everything, right? And it'll make everything better, right? Unless you're a criminal, and then you just don't want to use it, right?
Well, I appreciate you coming on. Go ahead. I'm sorry. I didn't mean to cut you off.
No, I'm good.
Yeah, Eric, I appreciate you coming on, man. I know we ran over, but I think this is super helpful to go through, especially what you're doing to alleviate the market stresses that John and I see every day. But it'll be interesting going forward. We'll have you on again, but I'm interested to see how DCG and Binance and Tether and all these other crazy happenings work themselves out. But it'll definitely change the environment for the crypto space, and probably for the better. I mean, a lot of this stuff needs to be worked out, but I appreciate you coming on. We'll have you come on again sometime soon to talk about where you are with your business and all the good stuff in the crypto world. But I appreciate it. Also, for the last word, is there anything you can tell everybody where to find you, how to follow you, all that good stuff?
Yeah. So email is eric.trelz, Trelz, at tp4-da.com. I'm on LinkedIn at Eric Trelz at LinkedIn, and then it's TP4 Digital Asset on Twitter. I couldn't get the S on there for some reason. But yeah, you can just reach out to me, and love to talk to you about what I'm trying to do. And if you have a suggestion, I'm open to hear all suggestions, even if you don't like that I'm using a enterprise blockchain.
Awesome. Well, take care.
Well,
we'll see you soon.
Thank you.
Thank you, John.
Very interesting.